Starting with little money? No problem. Investing isn't just for the wealthy, it's for anyone willing to take the first step. Today, we'll show you exactly how to begin your investment journey, even with just a few dollars. By the end of this video, you'll know how to invest wisely, minimize risk, and grow your wealth step by step. Ready? Let's dive in. First, let's clear up a myth. You don't need thousands to invest. Many platforms let you start with as little as $5 or even less. The key is consistency. A small but steady investment habit can turn into significant wealth over time. Step 1. Setting your investment goals. Before you start investing, you need to define your financial goals. What are you investing for? Retirement? A home? Financial freedom? Passive income? Each goal requires a different strategy. Short-term goals need safer investments, while long-term goals allow for more risk and higher returns. Step 2. Building an emergency fund. Investing is great, but life happens. You might need money unexpectedly, and pulling out investments too soon can mean losing money. Before investing, set aside 3 to 6 months of living expenses in a high-yield savings account. This ensures that when emergencies come up, your investments stay untouched. Step 3. Choosing where to invest. There are several ways to invest, even with a small budget. Let's explore the best options. 1. Stock market investing. Thanks to fractional shares, you don't need hundreds to buy stocks. Platforms like Robinhood, Fidelity, and eToro allow you to invest in big companies like Apple or Tesla with just a few dollars. A great way to minimize risk is to buy index funds and ETFs. Instead of picking individual stocks, an S&P 500 ETF allows you to own shares in the top 500 US companies, giving you instant diversification. 2. Real estate crowdfunding. Investing in real estate used to require large capital, but today, platforms like Fundrise and Rights, real estate investment trusts, let you start with as little as $10. These investments allow you to earn money from rental income and property appreciation without buying a physical home. 3. Bonds and fixed income investments. If you're looking for a low-risk investment, consider bonds. Bonds are like loans that you give to the government or companies. In return, they pay you interest over time. They don't grow as fast as stocks, but they provide steady income. 4. Cryptocurrency. Crypto is high risk, but also high reward. If you're interested in Bitcoin or Ethereum, start small and only invest money you can afford to lose. Many platforms, like Coinbase or Binance, allow you to invest with just $5. Step 4. Automating your investments. Consistency is the secret to building wealth. Most platforms allow automatic investments, meaning you can set up a weekly or monthly deposit. Even investing $10 per week can grow into thousands over time, thanks to compound interest. A simple way to do this is through robo-advisors, like Wealthfront or Betterment. These platforms automatically invest your money based on your goals and risk tolerance. Step 5. Understanding risk and diversification. One golden rule: never put all your money in one place. Diversification is key. Here's why. If one investment drops, others can balance your losses. You minimize risk while still growing your wealth. It helps you stay calm during market volatility. A balanced portfolio could include 60% stocks, ETFs, individual stocks, 20% bonds, government or corporate bonds, 10% real estate, rights, real estate crowdfunding, 10% alternative investments, crypto, commodities, etc. Step 6. Avoiding common mistakes. Many beginner investors make avoidable mistakes. Here are the top ones. Cross-market panic selling. The market always has ups and downs. Selling during a crash locks in losses. Cross-market following hype. Just because something is trending doesn't mean it's a good investment. Cross-market investing without research. Always understand what you're investing in before committing money. Cross-market not starting soon enough. The best time to start investing was yesterday. The second best time? Today. Step 7. Thinking long-term. Investing isn't about getting rich overnight. The best returns come from patience and discipline. Warren Buffett, one of the greatest investors, says, "The stock market is a device for transferring money from the impatient to the patient. If you invest $100 per month and get an 8% return, in 30 years, you'll have over $120,000. That's the power of compound interest." Step 8. Keep learning. The more you learn, the smarter you invest. Follow finance books, podcasts, and experts like The Intelligent Investor, by Benjamin Graham, Rich Dad Poor Dad, by Robert Kiyosaki, YouTube channels like Graham Stephan or Andre Geek. Final thoughts. Start today. You don't need a lot of money to start investing. The most important thing is to start now. Even small investments add up over time. What's your favorite investment strategy? Drop a comment below. If you found this helpful, hit like, subscribe, and turn on notifications for more investing tips. See you in the next video.